The Nifty flitting between red and green. What's looking good is the mid-cap index, which is up almost about 75 points right now.
The Nifty is up 0.5%, but the mid-cap index is up 1.7%.
So down around 100 odd points.
The latest bout of selling pressure has taken the Nifty to that 17,600 mark, almost there. Though in the last 30 minutes, things have stabilized.
We have closed below yesterday's low. In fact, we've closed at the lowest level of the day, 17,580.81.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the evening. Weak global cues dent Dalal Street as stock markets wipe out early gains to end in the red. Sensex loses over 500 points. Nifty loses over 150 points. It's a mixed day for Adani Group as its promoter creates additional pledges in some of the group companies. 4 of the group stock hits upper circuit while the other stocks closed with cuts. The group adds 4,500 crores to market capitalization today, but the total value is still 52% lower to levels seen before the Hindenburg report. A big capex boost powers Max Healthcare 3% higher. CMD Abhay Soy tells CNBC-TV18 that the company will undertake a 4,500 crore capex to add 2,800 beds over the next 4 years. The capex will be funded via internal accrual. Sequence Scientific rallies after calling off the acquisition of Teneta Pharma. Meanwhile, Data Patterns gains 3% after launching a QIP to raise funds. Sources tell CNBC-TV18 that the company plans to raise 450 crores with an upsize option up to 500 crores. A persistently hawkish tone from the US Fed keeps crude prices 5% lower for the week despite an unexpected decline in US crude inventories. A stronger dollar also weighs on prices. All right, well, those were the top stories. Let's also tell you what we have lined up on the show for you. In Market Opinion, we have Manishi Raychaudhuri of BNP Paribas, and in a corporate voice on the show, we have Abhay Soy, CMD, Max Healthcare. All right, well, first, here's a look at the day's trading action. Weak global cues dented sentiment on Dalal Street. The markets failed to hold opening gains and ended at the day's low. The Nifty and the Sensex lost close to 1% odd. The Sensex fell over 500 points while the Nifty fell 160 points. Broader markets fared slightly better than the blue chips. BSE companies erased a market capitalization of close to 2 lakh crores. Surabhi Upadhyay is here with the day's trading action.
Well, not a good day if you're a bull in this market at all, because the bears really made a very strong comeback today. And it happened in a span of 24 hours. The market today undid a lot of the heavy lifting, the painful work that it was putting together over the last 2 to 3 sessions, particularly yesterday. So what's the problem? Well, not only did we close at the lowest point of the day today with this 1% drop, the Nifty couldn't really hold on to yesterday's lows, Wednesday's lows. And we finally ended below the 17,600 level. There was a lot of momentum on the downside, and that was evident in the quality of stocks, the nature of stocks. I mean, a lot of large, heavyweight blue chips led this move down, and that includes names like Reliance Industries and ICICI Bank, TCS. So this was not a sporadic move structured by 2 or 3 smaller names, but the heavyweights were facing a lot of pressure today. Auto stocks were under pressure as well. Quite a few of the big ones like Mahindra and Mahindra, Tata Motors, Maruti, many of these names down between 2 to 3%. Mid-caps did relatively better, but even towards the end of the session, the advance decline ratio was favoring the declines, more declining stocks than advancing stocks. So again, it tells you that today's pressure was fairly broad-based and not something that you can ignore very, very lightly. There was some bottom fishing, but it was restricted mostly to some of the metal stocks, specifically the steel names. For instance, SAIL or a Tata Steel. That's why we saw some green pops. Of course, there were individual names on the mid-cap side, a lot of stocks moving around because of big block trades like a Gokuldas Exports. But that was all news-based. If I go back to talking about the market's mood, well, caution seems to have certainly returned. And that's because of the reality check that Friday you're getting into a very big event, which is the US non-farm payroll data. Remember, it was that event, the January report, that literally set the cat among the pigeons. And we really need to see what the Feb number will look like. And then how will those interest rate projections in the US move? For now, markets in India and around the world have gone back to watching the yields in the US as well as the dollar index, both of which remain elevated.
Okay, all right, Surabhi, thanks very much for that. But let's get in some market opinion. Manishi Raychaudhuri of BNP Paribas says one should avoid leveraged companies as they are vulnerable. He also says he is no longer cautious on IT service companies.
Cash generators and companies that have net cash on their balance sheets. We try to avoid leverage as far as possible. When we have a steadily rising interest rate environment, leveraged companies are kind of vulnerable in that environment. Second, we would also rather play value in preference to growth. Now, that particular angle, that particular consideration set is difficult to find in India. It's much easier to find in North Asia, in Korea and China. We were till recently quite cautious on the IT service companies, but in our most recent rebalancing of the Asian model portfolio, we have actually added to Indian IT service. This was about 3 weeks ago. And we think that, the kind of deals that are coming through for the top-rung frontline companies should protect their revenues even in this uncertain environment.
Okay, well, let's move on to the second headline now. 4 out of the 10 Adani Group stocks ended the day in the red, with the group gaining a market capitalization of over 2,000 crores today. The group stock's current market capitalization stands at 9.2 lakh crore rupees. Meanwhile, the promoters created additional pledges in some of the group companies. Adani Transmission saw an increase of 0.76% in promoter pledges, while Adani Green saw promoter pledge rise by nearly 1%. Vivek Iyer is standing by with the further details.
Well, an important update coming in as far as 2 of the Adani Group stocks are concerned. Adani Transmission as well as Adani Green were in focus. So yesterday, post-market hours, there was a notification to the exchanges where the promoter has said that they've gone ahead and created an additional pledge of around 0.76% equity. This is in favor of SBI Cap Trustee. Now, the total promoter pledge in favor of SBI Caps at this point of time stands at 1.32% in Adani Transmission. Coming to Adani Green, the total promoter pledge in favor of SBI Caps is 2%, indicating that there has been an additional 1% pledge that has been created in favor of the trustee SBI Caps. So, now remember, February 8, 2023, the Adani Group had actually pledged additional shares in favor of the SBI Cap trustee. And remember, 1.6 crore shares was the total amount of shares that was actually pledged with the SBI Caps. Now, when you're talking about what exactly is the meaning of this, SBI chairman had, in interaction to CNBC-TV18, had mentioned quite clearly that the Adani's promoters' additional share pledge was basically to top up collateral for existing loans, and the additional shares were not for a new loan or new pledges of the shares. In fact, on February 13th, there was a slight release in terms of pledges. There was almost 0.1% equity that was released in Adani Green. Now, despite that, the overall group continues to remain in focus, especially when it comes to promoter pledging activity and share-back financing.
Okay, all right, Vivek, thanks very much for that. Well, let's move on to the third headline today. A big capex boost powered Max Healthcare 3% higher. Speaking to CNBC-TV18, the CMD, Abhay Soy, said that the company will undertake a 4,500 crore capex to add 2,800 beds over the next 4 years. He also added that the capex will be funded via internal accruals.
We are going to be incurring a capital expenditure of close to 4,500 crores over the next 4 years. We have a base of 3,400 beds. And just to clarify, we are adding another 2,800 beds in the next 4 years. We are funding this entirely through internal accruals. Even at present, we are a debt-free balance sheet, and we continue to add about 250 to 300 crores of free cash flows to our bank balance every quarter, in fact. Our RPOBs are significantly higher already due to our clinical mix. 35% of our beds are critical care beds. That essentially signifies that we do a lot of high-end tertiary care work. We're able to do that because majority of our assets, 85% of our assets are in the metros. 30% of our beds are catering to institutional business. So going forward, you're going to see some distillation as well of the payer mix, which should be a key lever as far as RPOB is concerned.
All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories. Well, welcome back. You're still tuned into Markets Today on CNBC TV18. Let's get to the rest of the headlines that we're tracking for you. Well, on to the fourth headline today. Sequence Scientific rallied 15%. This is after the company called off its plans to acquire Tineta Pharma. Now, remember that this particular acquisition was announced in November of 2022, and the particular company is an India-focused veterinary company. It has an enterprise value of over 200 odd crores. The street, it seemed, did breathe a sigh of relief that the acquisition was called off, possibly because the fundamentals of the company still need to be strengthened, which is of Sequence Scientific. For example, the stock is down over 50% from its 52-week high. If you look at their Q3 FY23 numbers, they were still loss-making. They have been loss-making for the past 3 consecutive quarters. Margins have been below 3% for the past 3 consecutive quarters and in single digits for 4 consecutive quarters as well. And not to mention that their net debt position had risen to over 370 odd crores in the previous quarter as compared to the quarter before that. So there are some concerns with regards to the performance of the company. So maybe the street viewed it as a chance for the company to really strengthen its fundamentals. The company also had given an indication that maybe the closure is taking longer than expected in their conference call with analysts. So that's on Sequence Scientific. The stock was up around 15% but let's move on. Data Pattern gained around 3% after launching a qualified institutional placement or QIP to raise funds. Sources tell CNBC TV18 that the company plans to raise 450 crores through a QIP with an upsize option up to 500 crores. Vivek Iyer is here.
Data Patterns was the stock in focus, the company in focus, given the fact that the company has gone ahead and launched a QIP. In fact, sources indicate to us that the size of the QIP is close to 450 crores with an additional upsize option of around 50 crores. So the overall size of the QIP could be close to 500 crore. We also understand that the floor price for this particular QIP is around 1,284 rupees a share, and it's going to be interesting as to how exactly the funds raised via this particular QIP will be used. Remember, in the conference call of Q3 FY23, the management had alluded to the fact that they were looking to raise funds via this particular route. We understand that largely the funds will be utilized mainly for capex in terms of creation of some electromagnetic facilities that the company is looking to do, also towards debt repayment and also funding various projects as well as working capital. It's going to be interesting to see how exactly the demand is and what is the eventual price at which the funds are raised via the QIP route.
Okay, all right, Vivek, thanks very much for that. Let's move on. Bosch was in focus today after the stock hit a fresh 52-week high. Sonia is here with more details on what's driving the stock.
Well, thanks a lot for that. Bosch has hit a fresh 52-week high today. But if you look at the performance of the stock from the lows that we saw in the month of May 2022, the stock is now up almost 40%. There are a couple of drivers for Bosch over the next many quarters, and I think that's what the street is penciling in. First is the electric vehicle opportunity. Now, Bosch is the largest player in the EV component space globally. It supplies to a lot of EV domestic OEMs as well as global players, and is now focusing on localization. So Bosch has decided to invest 2,000 crores over the next 5 years for localization of components, that is manufacturing the components locally, and that will help them bring down their costs. They've also acquired businesses for battery systems and ECUs and is looking to improve their market share and other components as well. So electrification of two-wheelers and three-wheelers is a big opportunity for Bosch. Apart from that, Bosch also offers a complete solutions for hydrogen-based powertrains. They offer hydrogen engine systems, fuel cells, electric systems and tank systems as well. So these are the two big opportunities for Bosch. Other than that, Bosch is already the 4th largest player in the auto aftermarket segment. In fact, in the year gone by in 2022, Bosch recorded its highest ever sales per EBIT in the auto aftermarket segment. They also aim to achieve a strong double-digit market share in FY24. Talking about the earnings gone by, it was a very strong showing for them in Q3. In fact, the auto segment revenues grew 18%. The gross margins improved 80 basis points as well. But the only thing that you need to watch out for now is the valuations of the stock. After the 40% run-up that it saw from the lows in May, the stock is now trading at a PE of almost 30 times FY24 earnings. Back to you.
Okay, all right, Sonia, thanks very much for that. Well, sticking with stocks in news, CLSA expects a 31% upside in Bharti Airtel. The stock price is driven by rising tariffs. Reema's here with the details.
Thanks so much for that. So as you rightly pointed out, CLSA is very bullish on Bharti Airtel and they've pegged the target price in 1,015. In fact, CLSA has been extremely optimistic about Bharti Airtel. Let me tell you the drivers for this buy call. One, price hikes. Now, Bharti Airtel has already initiated price hikes at the lower end. The entry-level tariff plan, which was earlier 99 rupees. So the cheapest plan that you could find earlier was 99 rupees. Now that's discontinued, and now the cheapest plan is 155, which basically means the entry-level price has been increased in 19 out of the 22 circles. But that's not the big driver for ARPUs, because according to CLSA, this will increase ARPUs by only 3%. Sunil Bharti Mittal recently at the Mobile World Congress said that he expects more hikes by mid-2023, and CLSA says this current hiking cycle is very similar to what took place 2 years ago, where the company first started with the entry-level tariff increases and then they extended it to the data 4G prepaid tariff increase. So that's point number one. Secondly, they're also saying that the company is seeing a faster increase in the postpaid subscribers whose ARPUs are almost 1.7x times the overall consolidated ARPUs. So the minute you add more 4G subscribers, then your ARPU goes up. And Bharti Airtel has been aggressive in adding these 4G subscribers. And thirdly, they're saying the valuation of Bharti Airtel is at a 15% discount to its 5-year average. So that also solidifies their buy call on the stock.
Okay, all right, Reema, thanks very much for that. But let's move on to the fifth headline today. Persistently hawkish tone from the US Fed kept crude prices 5% lower for the week. This comes despite an unexpected decline in the US crude inventories. A stronger dollar also weighed on prices. Manisha Gupta is here with more.
It hasn't been such a great week for the crude oil prices till now, where we have seen 5% of a decline from 86 plus dollars per barrel kind of levels to where we are trading right now. And this is even as we have seen after 10 weeks of build-up in inventory, some decline coming in, even if it is a small 1.7 million barrels. But the hawkish statements from the US Fed officials and the strength in US dollar seem to be weighing onto the markets right now. And also the fact that even as China has promised further stimulus measures, but markets do anticipate that much of that would perhaps go in for infrastructure and construction and not so much for other consumption and sectors there. But what the street is watching is that as we head into the next quarter and the second half of this year, there is tightness that is coming into the market. The Russia sanction impact would perhaps also start showing in. The Chinese demand would also come back, and the US production numbers that we have seen until time haven't been very enthusiastic. So the OPEC says that going forward in this year, you could be looking at a demand growth of around 2.3 million barrels per day, and nearly 500,000 to 600,000 barrels per day could be coming in from China. There is even more bullishness that's coming in from Barclays, which expect that 900,000 barrels per day of a demand could be coming in from China. And Barclays also says that as we move ahead, you could be looking at Brent averaging at $92, and in 2024 that could go to $97 as well. Very positive or strong moves coming in from Refinitiv. They expect the Brent average to be at $90. Stancy expects it to be $91 in this year. Fitch is talking about $95 a barrel as well coming in for this year, and Bank of America talks about $88 a barrel. So when you look at all of these average forecast prices, the crude prices are trading much below these kind of levels, with an expectation that for the near term there could be further pressure. But as we move ahead in further months, you could be looking at demand and prices both coming back in positive.
Okay, all right, Manisha, thanks very much for that. With that, it's a wrap on this edition of Markets Today. Thanks very much for watching.
Powered